Hello and welcome back to It's Crypto Trading channel. In this video, I'm going to perform a multi-time frame price action analysis on the situation we are currently seeing on SUSHIUSDT. Things are starting to get interesting for a potential intraday trading opportunity, so a short-term trading opportunity. So let's get straight into it here. As always, we're going to keep things as educational as possible, starting on the monthly time frame. So here on the monthly time frame, at the moment, everything is currently bullish. We have an impulse to the upside, which has been followed by a correction. Now, if we draw in our trend lines, we can see that this correction could be interpreted as a falling wedge formation. So we could draw in this here. This is a wedge. We have the range narrowing and the potential continuation to the upside occurring. So if we just remove those trend lines, what the market is also doing, it is testing previous monthly resistance as new support. You can clearly see when the market come down to this area, it made a rejection to the upside. Once again here, it made a rejection to the upside. Again here with this green monthly candle and a rejection to the upside. Also, we have 22 days left on this monthly candle, but we do have this candle here with a large green body and a large wick. And usually when the market prints this pattern, you can expect the market to complete the pattern at the neck, to fill in the wick, sorry. When the market makes this candle on the monthly time frame, a lot of the times the market will fill in the wick. So we do still have 22 days for the market to potentially fill in this wick and test this level of monthly supply. We are also testing this monthly demand, and I expect the same reaction to as what we had all across this zone, and the market to make a rejection at this zone. If we drop down to the weekly time frame and see what we can see from a weekly perspective. So we have the wick that we've identified here. We can just remove that for the time being. So we can also see this falling wedge formation, which I just mentioned, even clearer here on the weekly time frame. Let's just adjust that. So here on the weekly time frame, we do have this wedge. The range is beginning to tighten. This is a very nice wedge here, and we can expect the market to break out of this wedge bullish and potentially make the continuation to the upside. Also, what we can see here is we have the monthly resistance, which is acting as support all across this zone. Also, we have a very important structure level. So we have this W formation here. The market made this clear W formation here. If we get our brush tool, just so you can identify it, the market goes down, up, and made this very nice W formation. Now, generally speaking, when the market prints a W formation on higher time frames, so when the market makes this harmonic pattern, you can expect the market to complete the pattern at the neckline. I speak about this over and over again. And what has the market done? It has completed the pattern at the neckline, which is previous resistance turned support. So if we extend this previous resistance over here, so exactly at this zone, what can you see? So here the market was acting as support at this zone, support at this zone, support. Then we broke it to the downside. Then the market was acting as resistance at this previous support. Then what happened? The market broke this previous resistance to the upside. As you all know, when resistance gets broken, it then acts as support. So we have previous resistance here all across this zone, previous resistance, we've broke it to the upside, we've come down, completed the harmonic pattern, and retested previous resistance as new support. And you can see as we speak, the market is rejecting this resistance and showing signs of demand at this zone, showing signs of bullish strength at this zone, and we could see the continuation to the upside. If we take our Fibonacci from the low to the high of this weekly impulse, because this impulse broke above this resistance, therefore it is a impulse, we can see that the correction is currently testing the golden ratio, the 0.618, and we could see a rejection from this zone. So with that in mind, we are testing weekly demand and we expect a push to the upside. Going down on the daily time frame, we can clearly see the demand from the weekly. We don't need to have that on our daily chart. I like to keep our charts clean so it doesn't confuse the brain here. So here on the daily time frame, we are testing support, and we also have on the daily time frame a M formation. If we take our tool from this high all the way up, down, up, we have this very easy to see. It's a little irregular, but we do have a nice M formation here. Where is the neckline of the M formation? The neckline of the M formation is at the low of this bearish wick. You can clearly see it goes up, down, down and forms this M formation here. So another harmonic pattern. As I said, this pattern happens over and over again on multi-time frames, and it does tend to complete at the neckline. So with that in mind, with everything in mind that I've just said, the monthly time frame is testing a strong level of demand and is bullish in a falling wedge formation. The weekly time frame is testing a strong level of demand and has a bullish impulse and correction on the weekly time frame. The daily time frame is testing the same level of demand and also has this harmonic pattern we expect to complete at the neckline. So how will we be approaching this with students? The market is testing this zone, and all inside of this zone with students, we will drop down to the 1 hour time frame and look how we can be potentially capitalizing on this corrective move to the neckline of this M formation. Let's just quickly go down to the 1 hour time frame and have a look what we see. Let's delete that zone. So, as we are currently talking, on the 1 hour time frame, everything is bearish. We have a high, a lower high, a lower high, and a lower high. Also lower low, lower low, lower low, lower low, and lower low. So currently, as we are speaking, although we expect the market to bounce and make the corrective move to the neckline of the M formation, at the moment it's too early to be entering this position. The market is in a downtrend. It is in a micro downtrend. The short-term trend is bearish. And we cannot be trading against the trend. I don't advise it. It is not a good idea. So what we need to wait to do is wait to see bullish structure on the 1 hour time frame. We have this descending trend line here. So this is the trend on the 1 hour time frame. We have a descending bearish trend. However, if the market breaks above the bearish structure, so if the market makes a 1 hour higher high above all of this level of resistance, on the retest is where we will have a change of structure. This will be because we will have a new higher high here, and on the retest we have a new potential higher low. So if we see a 1 hour close above the bearish structure, new higher high form, on the retest, this is where we will potentially look for a entry to capitalize on this harmonic pattern. Our first target will go on the neckline of the M formation. Our stop loss will go well protected below this level of support that we have here. We have clear support across this zone. We can just draw it in here. So we have support at this zone. Our stop loss will go well placed below this zone, so it is protected. Our entry will go somewhere here. We use indicators to determine our entry and give us confidence for entry. I'm not going to obviously disclose our full entry rules here, but all in all, what we're waiting to see is a 1 hour higher high. On the retest, we will look at entering this this potential intraday long position. So let's just see how things play out here. We could obviously still continue bearish and just keep coming down before we make this move to the upside. So let's just observe the market for now and see if our entry rules are satisfied.